Welcome to The Explainer. Today we are diving deep into the world of accounting. We're going to take what looks like a total mess of chaotic numbers and show you how it's actually a crystal clear story about any business you can imagine.
You know, when you think about it, every single company out there, from the tiny coffee shop on the corner to a massive global corporation, has a financial story. But how is that story actually written? What's the language they use? Well, that's exactly what we're going to figure out today.
Because let's be real, the day-to-day of a business is just a whirlwind of financial activity, right? Money's coming in from sales, it's going out for bills, you're buying supplies, paying your people. It's a constant flurry. And without some kind of system, it's all just noise.
So how in the world do we bring any sense of order to all of that chaos? Well, it all starts with one single, absolutely unbreakable law. You could call it the golden rule of accounting, and it's the foundation for literally everything else. And here it is. Assets equals liabilities plus owner's equity. Now, this isn't just a helpful tip. It's like the law of financial gravity for a business. Every transaction, and I mean every single one, has to keep this equation in perfect balance. Always. No exceptions. So let's break this down real quick. Assets are just all the valuable stuff the business controls. You know, cash in the bank, the computers, maybe a delivery truck. Liabilities, on the other hand, are what the business owes to other people. Think bank loans or bills you haven't paid yet. And owner's equity? Well, that's the owner's piece of the pie. It's their stake in the company's assets. Okay, so we've got this rule, this perfect equation. But how do we actually use it with all that daily chaos? Well, it starts by keeping a kind of financial diary. It's called the general journal, and it's where we write down every single thing that happens as it happens. Now, this diary is written in a pretty special language. The language of debits and credits. And the most important thing to do right now is forget everything you think you know about those words. In accounting, they are not good or bad. They're just opposites, like a push and a pull. A debit does one thing, and a credit does the exact opposite, all to keep that main equation in balance. It's a pretty elegant system, actually. And the process for actually recording something is beautifully simple. You really just ask three little questions. First, which accounts were affected? Did our cash go up, for example? Second, how did they change? Did they increase or decrease? That's where we use our debit and credit rules. And finally, you just write it all down in the journal. That's it. Simple as that. Okay, check this out. This is literally the first page in a new business's story. The owner, Fatharafa, puts $1 million in cash into the company. So the business's cash account, that's an asset, goes up by $1 million. We record that with a debit. At the very same time, the owner's stake in the business, their capital, also goes up by $1 million. We record that with a credit. See that? A debit and a credit, perfectly balanced. So now our diary, the journal, is starting to fill up with all these entries, one after another. It's a perfect timeline, which is great, but it's not very organized. To really see what's going on, we need to sort all that information. We have to move from the diary to something more like a filing cabinet, the general ledger. And this sorting process has a special name. It's called posting. But honestly, it's just a fancy word for taking each little detail from our daily diary and filing it away in the correct folder. So all the cash stuff goes into the cash folder. All the loan stuff goes into the loan folder. You get the idea.
And the process itself? It's really just mechanical. You take that $1 million debit to cash from our diary entry, and boom, you file it in the cash account. You do the exact same thing with the $1 million credit to the owner's capital account. And what's so important to get here is that we're not creating new information. We're just taking the same story and organizing it so we can actually understand it.
Okay, so after all this recording and all this sorting, after maybe thousands of transactions, we have to hit pause and ask a really important question. Did we get it right? Is our story accurate? It is time to proofread our work, and for that we have a tool called the trial balance.
The trial balance has one simple but absolutely vital mission. It takes every single account in our filing cabinet, our ledger, and lists its final balance. Then, it adds up all the debit balances and all the credit balances. And if we did everything right, those two totals should be exactly the same.
Uh-oh, but look at this. Sometimes they're not. Our total debits here are just over 1.3 million. But the credits? They're over 2.1 million. That's a problem. Our unbreakable law of financial gravity has just been broken. The story makes no sense.
So this right here is the whole point. The system has just waved a giant red flag telling us there's a mistake.
Somewhere along the line, a number was typed in wrong, a decimal point slipped, something got put in the wrong column. That chaos is trying to creep back in, and now we have to go find that error.
And there it is. A simple typo in the supplies account and another number posted to the wrong side. So we make the fixes. We run the trial balance again, and voila, it works. The debits and the credits are perfectly equal. The balance is restored. We have found our clarity.
And that, right there, is the whole journey. We started in a total storm of chaotic daily business activity. But by using that one simple, unbreakable equation, the special language of debits and credits, and a system of checks and balances, we've created a logical, accurate, and completely understandable story.
You see, what we've really done today is learn the basic grammar of business. Because accounting isn't really about math. It's the language that companies use to talk about success, failure, risk, and opportunity. So the only question left is, now that you know how to read it, what stories are you going to uncover?